Wayne, thanks indeed for coming in. Well, it was a bloodbath today. I mean, following the markets abroad. And again, two words, US, China, or is it more than that?
It probably is just that. I mean, understand the markets, specifically overseas, have had a massive run since about halfway through December.
Yeah.
So the markets have had an incredibly strong first quarter, probably one of the strongest in decades. So a little bit of weakness is not that unusual, but clearly it is triggered by trade wars. Then I suppose as a secondary thing, global growth rate is slowing down. So the world is still growing, but it's growing at a slower pace. The things that's on our side is stock markets are not excessively overvalued. They're certainly nowhere near the valuations we saw in 2008 or 2003. So I think people who might be starting to panic about a true bear market are maybe being a little bit pessimistic. So far, we actually haven't lost that much.
Yeah, but we still have that residue of results out this week, which weren't that impressive.
No.
If you look at the retailers, they weren't. We'll bring up those banking shares as well and see that the performance certainly wasn't great today.
Now, look, the banking shares I actually found quite odd because they clearly are not expensive at these levels. And maybe they're just liquid enough and the foreigners own them. So when there is a bit of panic, they're sold because, I mean, their outlook's not great, but they will still grow earnings. And as I've said, they're not expensive. So I found it unusual that they were singled out. I mean, there are many more expensive shares than the banks on the market.
Massmart falling 13% today. Now, we know there was much more to this share than just, than just what happened today. Was there ever a good time for Massmart after Walmart?
No, they've had a terrible time. Walmart bought them right at the top of the cycle when our economy was growing and the outlook was quite rosy. You know, good commodity cycle, everything was almost in our favor, and they bought the shares then. And they've suffered through a combination of two factors. The economy hasn't been great, and maybe some of their brands haven't performed the way that they expected them to perform. But today, what they told us was very interesting. They said, we actually don't know what results we're going to show you, but they will be at least 50% lower. So that is a lot of uncertainty because it might be at least 50%, might be 100%, it might be 52%.
Yeah.
You know, so the band for possible outcome is very, very big. I suspect they will update the market the moment they have their grip on it. And of course, they've changed chief executives as well.
Yeah. I mean, just looking at what happened with Pioneer Foods earlier, they're also under a lot of cost pressures, and they simply cannot transfer that to the consumer. It's not the time to.
No, you can't. Look, I mean, the consumer's in a terrible state.
Yeah.
When we see the first quarter economic numbers for South Africa comes out 6th of June or somewhere around there, they are going to be a shocker. I mean, they're going to be a proper shocker. And I think that will jolt the market maybe even more than what people expect. But, you know, when you think about South Africa, we seem to be getting some structural reforms. Yeah. The outlook's actually quite positive. Even the Reserve Bank today, listening to the governor, even though he says our model only shows a cut next year, it's the first time the model has shown a cut. And it's just a model. And 2 out of the 5 said cut interest rates. In other words, more than likely an interest rate cut is coming and coming before the beginning of next year.
Yeah.
So that's good news. You know, if the state president announces a cabinet that is seen to have integrity and has will to implement what's necessary to be done, the outlook is not that negative in comparison to what we've had for the past. I mean, we could get in 2 years, we could go to 2% growth, 2.5%, which is still woefully inadequate, but it's better than zero.
Yeah, it's interesting you mentioned growth because that's another flag today, wasn't it? He's dropped the growth forecast for the country.
It was inevitable,
yeah. And, of course, he also spoke to what you're touching on, I mean, this contraction in the first quarter. So, again, the Reserve Bank governor telling us, look, we've got to get things shaped together on the growth front. The Reserve Bank can't do that.
No, not by itself it can't do that. But the outlook for inflation is actually reasonable. You must remember the Reserve Bank has changed their policy. They've done it a little bit subtly. The policy used to be between 3 and 6. Now the policy is 4.5. It's not between 3 and 6, it's now 4.5. And you know, 5.1 is not too far off from that. It also seems inevitable that in the US interest rates will be cut in the not too distant future, and then that might enable us to do an interest rate cut. Remember, these first quarter numbers is more to do with the Schedule 4 load shedding and the effect it had on manufacturing and mining than the consumer getting, really significantly poorer than what they were in the last quarter of last year. It's more to do with this, with the Eskom issue than anything else.
Wayne, what do you make of the news coming out of Momentum saying that, look, they've paid out millions after, realizing that what the clients were asking for after they refused to initially make that payout to a victim that
Correct.
died of violent death. What do you make of that news?
Well, look, Momentum obviously realized that withholding the payment initially was the wrong thing to do, and they have paid it out. And we know that they've changed their policy in respect of these payouts now,
Yeah.
and they are now paying out in terms of their new policy. So I think they are doing the right thing.
And just lastly, I mean, you looked at the oil price. We've seen it drop quite tremendously. I mean, from my perspective, when the oil price drops, you would think, well, then, activity in the world, as far as in the economic front, is probably not turning as fast. But what do you make of this? Is this artificial? You said the last time it
Correct,
was.
yes. The high oil price was artificial because it wasn't driven by excess demand. It was driven by a curtailment in supply.
Yeah.
So it's now, you could even say, coming back to reality. It is good news because the lower the cost of energy, obviously, the better it is for everyone, but it's reacting to the stock markets, and there's now a perception out there that maybe the world economy is slowing quicker than what we think, because when you look at data that tries to predict the future, all of the major economies except America are hovering at zero, call it. America's still positive, but it's falling rapidly. And maybe the oil price was just held up too high at the $72.
Wayne McCurry, thanks very much indeed.